Hi, good morning, good afternoon, and good evening to you, wherever you may be listening across the globe. Welcome to an Ethical Corporation webinar on joint approach to ESG engagement, investor relations, and sustainability. I'm Ed Long. I'm head of the US operations at Ethical Corporation. Non-financial performance is increasingly having financial relevance to investors, meaning reporting professionals from two different worlds need to collaborate to understand what this ESG demand means and how to share non-financial data in a financial context. Now, to help you get in front of this trend and understand the latest approaches to further collaboration between internal teams, today you'll hear from 4 companies tackling the issue head on. We will be covering the imperative of disclosing ESG information, framework for disclosing ESG, the challenges, opportunities of investor relations and sustainability collaborations within issuers, engagement between issuers and companies, collaborations on ESG and why this is important. Now, today joining us we have Anna Potts, who's the head of Responsible Investment Americas at APG Asset Management, Carrie Christopher, Director for Sustainability Reporting at Newmont Gold Corp, Megan Fielding, head of Strategic Partnerships at Responsible Investing at Nuveen, and Dan Chiray, Vice President of Sustainable Finance at ING. The session is going to be moderated by Brian Tomlinson, the Research Director at CECP. Today's webinar is going to be an hour in length, and it's a 1-hour discussion. We have around 1,500 people signed up today, so thanks very much for your interest in the webinar. It's clearly quite a hot topic at the moment. On the right-hand side, you'll see a box where you can post your questions. Please do post your key questions throughout the discussion, and we'll hope to get these answered for you as best as possible. And it's my pleasure to hand over to Brian to get the discussion underway. Thank you, Brian.
Thank you so much, Ed, and good morning, good afternoon, and good evening to everyone on the phone. It's a terrific and timely topic, and we have a terrific set of panelists to speak about it. Wanted to take a couple of minutes to just frame the conversation before we delve into questions, addressing how this issue is adjusting for both corporates and investors. So on the corporate side, over the last 10, 20 years, you've seen a significant disclosure in the reporting ecosystem with more sustainability disclosures. However, that's tended not to be part of the periodic disclosures that companies make to their investors. So investor relations and corporate sustainability are increasingly having to engage with each other on these themes. So in many ways, disclosure is kind of acting as a forcing function. In order to disclose about sustainability to your investors, companies are having to put together further internal collaborations in order to work out what's important, work out what's material. And in many ways that requires ESG to be taken out of a sort of sustainability reporting silo, connected to strategy and connected to financial performance, both in terms of right now and the company's prospects over the long term. IROs are increasingly being expected to engage with ESG and sort of overcoming some of the reluctance around that. A really interesting data point there is the National Investor Relations Institute in the US issuing an ESG policy statement, kind of a call to arms to IROs to engage more on ESG. And increasingly we're seeing IROs and CSOs on calls together with investors, so really collaborating on a company's narrative. On the investor side, just the sheer volume of demand for more and better information around ESG themes is overwhelming. I think that's happening for a number of reasons. Changing conceptions of fiduciary duty as being one of these things as ESG moves away from kind of being associated with ethics and is now more associated with value, risk, and long-term financial performance. And investors are really engaging with their portfolio companies on ESG across a number of channels, whether it's through bilateral meetings, the shareholder proposal process, or through collective engagement. So we're no longer in a position where we're hearing from companies now that investors aren't asking about ESG. That's really changed. And when we work with companies to help them prepare long-term plans, we're really encouraging companies to expand the reporting that they provide to the capital markets around long-term themes such as ESG risks and opportunities, human capital, and corporate purpose. So that's a brief level set as to why we're talking about this topic and why it is so timely. So I wanted to, by way of introduction, enable each of our panelists to talk about, for their institution, the imperative of ESG disclosure. And obviously we have a mixture of institutional investors on this call, but we also have an issuer on this call. So Carrie, perhaps starting with you, if you can talk about the imperative of disclosing ESG for your company.
She might be on mute.
I am on mute. I am no longer on mute. Thank you. So looking back on 2019, the velocity and the change in the consolidation in the ESG space has been really stunning. We've been behind it at Newmont for some time. We've been sustainability reporting for over a decade, but we are happy and delighted to see that investors are asking about that, and we're working to kind of align with what investors are looking at. From a broad perspective, this growing recognition that non-financial performance has material and financial relevance for investors is very apparent to us. A couple of things that we know and we have a felt sense for is companies with higher ESG rankings and ratings are more competitive and can generate better returns. And higher rated ESG companies tend to have lower systematic risks and therefore lower cost of capital, leading to higher discounted cash flow valuations. ESG is particularly important. We are the largest gold mining company in the world. Energy and mining sectors have a tremendous ESG risk exposure, from in-country risk to resource intensity, climate resiliency, social acceptance, ethical and inclusive governance, and safety. These are some of the non-financial performance indicators that our investors really want to know about. So our challenge is working with investor relations and this cross-pollination of the sustainability world and the IR world, and coming together to communicate comparable, decision-useful ESG performance data that allows our investors to differentiate leaders from laggards in our space.
That's terrific. Thanks so much, Carrie. So having heard the issuer perspective, really interested to get across your different strategies a sense of how ESG disclosure is so critical for each of the investors on the line. So if we can go through beginning with Anna, and then Megan, and then Dan.
Hi, thank you. It's Anna Pot calling from DSS Management. I assume you hear me? Yes. So thank you for having us on the line, and really pleased to see that so many of you are interested in this topic that's very close to us and important for us as a pension fund asset manager. In terms of why we engage with companies on ESG topics, clearly, because we want to know the companies that we invest in, both from a risk, from a return, but also from an ESG angle. We want to understand the companies that we invest in because because we want to make good returns on our, that we are engaging in a dialogue with the companies and the boards that we invest in. And next to that, we want to improve the companies. We want to improve the sustainability profile and governance performance of the companies we invest in, because on the long term, we want to, we are a long-term investor, and therefore want to make sure that companies improve their performance to bring better and responsible and sustainable returns for us. In terms of how we do that, we are an active engager with companies. We talk with companies on a very regular basis on corporate governance and on sustainability. So maybe three things to highlight to give you a picture of what that means. of our engagement? Well, first, we vote all our shares, and around the annual general meetings, there is an active dialogue between us, our responsible investment team, our governance experts, but also our portfolio managers about corporate governance aspects like remuneration, board diversity, expertise of board members on ESG, but also on climate change and other topics that are important to us. As a second stream, I would highlight that we engage with companies on specific themes that are important for us and our clients. For instance, we have an engagement about human rights in the energy sector. We have engagement on labor standards with apparel companies, just to name a few, so you have an idea of themes that we have engaged with and are engaging with and continue to engage with. And then the third angle of our engagement agenda that I'd like to highlight is that we have an engagement that is part of our implementation of what we call our inclusion policy. This inclusion policy enables us to systematically address ESG issues in our investments. And basically what it means is that we have defined for each and every company that we invest in an ESG classification. The word just mentioned before, leaders and laggards, that's also terminology that we use internally to define if we feel a company is meeting our minimum requirements that we set for these companies operating in. This helps us, and this helps our portfolio managers and analysts to make a conscious investment decision that we are able to explain and to our clients and to the beneficiaries in the pension funds of how we have considered ESG next to risk, return, and costs in our investment decisions. In terms of engagement, it means that if we invest in what we call, quote unquote, an ESG laggard, first of all, it's a conscious investment decision. We know what the issues are, and we know what it means for the company. But next, it means for us that we define it's important to engage with this company, that we allocate our capacity and time to engage with this company on this issue to improve its performance. And with that, you can imagine there's a whole system in place to ensure that we monitor the progress of those engagements. And indeed, eventually, this will lead, we hope, in the situation where this ESG so-called laggard will transfer into an ESG leader. I'll leave it here. Thank you.
That's terrific. Thanks, Anna. Over to you, Megan.
Thank you, Brian, and hello, everyone. I am Megan Fielding, and I work in our Global Responsible Investing group here at Nuveen, where I lead our strategic partnerships team. Nuveen, as many of you know, is a $1 trillion asset management firm and a TIA company. And responsible investing is a core pillar of our firm that transcends all asset classes, really has relevance in all of the work that we're doing in all of the areas in which we're investing. I might rephrase this question from sort of the investor's lens in terms of why do we care about responsible investing and ESG issues? Really, the answer is, in short, we believe that ESG factors provide an additional lens to assess and influence company or issuer performance. We also have strong conviction that responsible investing can lower risk, create opportunity, improve financial performance, and drive positive social or environmental outcomes. Looking a little more at the whole concept of alpha creation, 84% of market value of the S&P 500 is now comprised of intangible assets such as intellectual property, goodwill, brand equity, customer, supplier relationships, and public rights. These intangible assets are deeply tied to ESG factors, and therefore we find that incorporating these factors into our investment decision-making processes and company engagement can really help us focus on the long term and potentially accomplish long-term financial performance. Secondarily, in terms of managing risk, linked to the value of these intangible assets is the amount of risk that lies within ESG-related issues. The World Bank did some interesting work, and it's publicly available. It's a regular report that they release on global risks that pose significant negative threat to the world economy and industries. Of these risks, more than 50% fall into ESG areas. We find that reporting and disclosure around these non-financial issues can help identify and mitigate potential risks for the companies in which we invest. Really important. And then finally, as investors, we're always seeking opportunity. Beyond alpha creation and risk mitigation, which relies on a company having robust policies, disclosures, and ESG issue management, we firmly believe that there is an opportunity to find companies that are also having positive social or environmental outcomes as a result of their businesses. Kind of tied to that also is the opportunity that lies within the United Nations Sustainable Development Goals, or the global goals. And we can certainly talk about that later in the webinar. But through investing in themes related to the SDGs, we find that there's a lot of opportunity, such as through the lens of sustainable consumption or food security, environmental preservation, etc. And ultimately, as investors, this is of great interest. I'll leave it at that, Brian.
Thanks so much, Megan. Dan?
Hi, Brian. Thanks for having me today. Can you hear me okay?
You can.
Yep, we can hear you.
Okay, perfect. Great. So my name is Dan Shuri. I'm on the Sustainable Finance team at ING. In here in New York, we take a slightly different approach to the market just because of the nature of our business. But really, we think about the importance of ESG disclosures across three of our main financial services. That's lending, strategic advisory, and DCM. So when we think about, say, the lending side of things, we very much have the position that sustainable business is better business. And we've created a whole lot of different tools and solutions that reflect the fact that we believe that companies that have sustainability well integrated into their business strategy, well integrated into their financial needs, we believe that has a positive effect on their revenue growth. It's really as simple as that. So we've created mechanisms that really reward that. The sustainability improvement loans, it's a lending service that essentially, in its simplicity, will reduce interest rates based on the improvement in sustainability in a company, and that really is because we think that this is going to be key to companies. Sustainability in the past was core to a company's branding or its image. Sustainability right now is core to a company's entire business, its entire business model, and the way that it creates revenue and creates value. So on the lending side, it's very important. On the DCM side, so that's equally important. So we've heard from Anna and Megan on some of the sustainable investing techniques that are really evolving in time. I think according to the GSIA, there's around $30 trillion of assets under management with sustainable investing techniques, and that could be exclusionary screening, that could be positive ESG integration, that could be through engagement, or that could be through thematic tools. And that's really something that we look into is thinking about thematic solutions that will basically help to raise the profile of company sustainability efforts in the capital markets. Products like green bonds, for example, is a very good way of helping to translate the sustainability strategy, the disclosure of ESG related data to the wider market for things like portfolio diversification, to widen the investor base, and really it helps companies to access a potentially larger pool of capital that could do things like reduce capital costs or lending costs. And then the third branch is on strategic advisory, and that really comes down to the fact that we believe we need to work towards a low carbon, self-reliant society, and we want to help companies get there. And how do you do that? Well, you need to understand what you're working with. You need to understand what their specific position is right now in terms of environment, social, and governance disclosures. But more importantly, what their long-term strategy is. And I think we'll talk about this later on today. But I think we're seeing a shift in the way that ESG disclosures are coming to the market. It used to be kind of backward-looking. It's now moving much more towards forward-looking statements around a company's wider strategy. I'll leave it there.
That's terrific. Thanks so much, Dan. I think that's a great level set from everyone. And look, turning to Carrie, I wanted to talk a little bit about how issuers can begin to kind of respond to that demand for more and better ESG information in an investor relations setting. You know, we've often seen that sustainability disclosures have been somewhat siloed. You know, they certainly haven't been the subject of analyst questions on the earnings call. You know, how can a company internally start to pull together the collaboration between investor relations and corporate sustainability to kind of agree on, you know, what's important and what can be disclosed? It'd be really interesting, Carrie, to get a sense of what that journey has been like for you as a sustainability reporting professional.
Sure. Yeah, thank you, Brian. So I'm very fortunate to be here at Newmont. They're a fairly mature sustainability reporting organization. And what we've done as ESG has become more and more relevant, we're seeing this, you know, as I mentioned earlier, increasing interest in ESG performance comes this need for agile, meaningful, relevant information. So what we've done is we have an ESG strategy working group that we formed a couple of years ago to look at sort of this convergence of the sustainability reporting space, where I'm firmly rooted in and come from, and the investor relations space, and how to tell our equity story and address our ESG risks. So a couple of things that I would recommend to companies who are starting out on this journey is to first, you know, really understand who your investors are and engage with them on a regular basis, understand what issues are important to them, that continuous ongoing dialogue with your investors to understand and make sure that you're aligned and what matters to them. Also, really understand what matters to you. And if you haven't yet, start to draw links between your sustainability performance and your strategy. At Newmont, we have embedded our sustainability strategy within our business strategy. So everything that we're doing is focused on superior operational execution, global portfolio of lifelong assets, and leading in profitability and responsibility are some of the areas that we're looking at. So we're already doing that on the ground with, you know, community relationships, tailings facilities management, climate and water, global strategies, all of the programs and performances that we're doing globally. The challenge is to how to translate that intangible value creation into the tangible metrics that are going to resonate with your investors. So we formed this ESG strategy working group a couple of years ago and started to really, there was a cross-pollination of, you know, the finance side and the sustainability side, and really the risks are, a risk is a risk. So how we're discussing that risk, how we're disclosing that risk, and working together to look at how we're telling our equity story from an ESG lens, how we are translating that and how it creates value or how it mitigates risk. Those are the key things with us. So I would say actively for the IR people who are listening, if you do have a sustainability department, start to have those conversations with them. Start to look at also continuity between, you know, what you're saying in your annual reports and what you're saying in your sustainability reports, and start to look for, you know, that alpha, as the speaker before me mentioned. All of those global risks, 50% of those, I believe, was the statistic, are tied back to the ESG risks. So what we did, as I said, we started an ESG strategy working group in 2017. We have executive championship from our chief financial officer and our chief sustainability and external relations officer. It was requested by the board. We have a very progressive sustainability set of expertise on our board. And so it's come from the top down, and we've learned how to speak each other's language, how to understand. We have a different cadence. IR is very, quarterly driven, and sustainability is either in country on the ground or, at corporate, managing the ESG ratings and rankings disclosures and the sustainability reporting disclosures. So I'd also like to refer, I believe it was Sustainability produced a really nice white paper on the convergence of IR and sustainability professionals, and it was released, I think, in 2017 or 2018. It was a really, really good paper that kind of talked about some of the challenges and tips for bringing the two sides together. So over the 2 years that we've been working together, 2.5 now, we really formed deep relationships. We speak each other's language, and we've worked together to really understand what our investors want, and make sure that we're aligned, and also to make sure that we're communicating in a way that resonates, so that we're communicating externally about what we do, and the ratings and rankings are vitally important. We look at which ones matter most to our investors, but it's also on the ground performance that is really reflects the collaboration of what's going on the ground and how we're reporting that out. I am finding that there is more appetite for in-country context, not just tell us, your strategy and your policies and your standards, but how do you distinguish, how does this play out on the ground? For example, in our sector, we have artisanal and small-scale mining. What that looks like in Colorado might be very different to what that looks like in Ghana, and we're finding that investors want to understand so that they can distinguish our performance from competitors and understand really what we're doing on the ground, how we differentiate, and how we're creating and preserving value for the company and also for our communities. So it's been a journey. We have a ways to go, but the collaboration is really good. So if you're an investor, again, reach out to your sustainability team. If you're in sustainability, reach out to your IR team and just get the conversation started.
That's terrific.
And I'm good for now. Mm-hmm.
Thank you. I mean, we certainly see that in our work, which is, the more developed the relationship is between investor relations and corporate sustainability, and indeed corporate secretary, risk and strategy, those other functions sort of pull together in ESG working groups, the faster the journey to build a coherent story around ESG and your investor narrative can go. And we do see again that concern around reaching shared understanding between corporate sustainability and investor relations, both in terms of cadence, time horizon, different concepts of materiality. Really, really interesting and difficult work that takes time for a company to get its arms around, and that's a terrific description of your process. And I wanted to use that as an opportunity to kind of pivot back to the investors to talk about how you think about the different reporting frameworks that issuers can use to ensure that internal process that Carrie described kind of spits out the right type of decision relevant information that you're looking for as investors, and conscious of the fact that you're different investors with different strategies, but it'd be interesting to get a sense of those key frameworks that corporations can use. And that's also a question that we've just received through the app. So perhaps we can start with you there, Anna, and then get thoughts from Dan and Megan.
Sure, please start with someone else.
Okay.
This is Dan here. I can speak this for the time being. Before I do, I think one thing that's really worth mentioning based on Carrie's thoughts before, is that actually it now goes beyond just the sustainability team and investor relations. I think the conversation is also moving clearly towards treasury and finance. We're seeing groups within these roles are realizing that there are benefits to sustainability from a cost optimization perspective, and that is becoming increasingly important and putting it on the radar of the CFOs of companies. Any product that will lower the cost of borrowing for a company is or it's going to really speak their language, and I think that's a really interesting development that we've seen. And on that, with sustainability improvement loans, these loans I talked about before, the sort of data that we're looking for really fit into one of two buckets. The first one is around ESG scores, so that could be scores that are based from third-party companies, and a lot of their information comes from a whole variety of different frameworks. It could be frameworks like the GRI or the CDP, integrated reporting. It could be standards like SASB, for example, the Sustainability Accounting Standards Board, or it could also be guidelines. So we see guidelines from the Task Force for Climate-Related Financial Disclosures, the TCFD, and then more specific or niche applications through things like the Green Bond Principles or the Social Bond Principles. And I think really what that speaks to is that there's a lot of different approaches in the market for very different objectives. Some are around risk mitigation, others are around impact and finding the positive impact within certain companies or company activities. Some focus more on environment, some focus more on social, and some focus more on governance. I think we're seeing three things happen here that I think are worth mentioning. The first one is that across all of these frameworks, and there are a number of them, and we constantly hear that there are far too many for corporates to really focus and fill out. But I think we're seeing consolidation in the sense that we're moving much more towards quantitative data, whereas sustainability was really a qualitative approach. I think that as this becomes key to true integration into financial services, be it lending or be it on the equities or the fixed income side, we need data. And so we're moving from qualitative to quantitative. As I mentioned before, the next thing that we're seeing is we're moving from backward to forward-looking data. I think as this becomes key to company strategy, it becomes increasingly important to understand what is the company's position for a more climate resilient future. How they're thinking about government policy and regulations that might impact their ability to do business, that might impact their social license to operate, for example. And then the third thing, something that you mentioned, Brian, is around materiality. I think we're coming to the conclusion that not all companies can report on every single environment, social and governance factor. There are hundreds, if not thousands, that they could report on. They simply don't have the time or the resources, but more importantly, not everything is important to each company. So I think we're moving much more towards a materiality-based approach. What is material financially important for each company based on its market, based on its sector, based on a whole bunch of other different factors, like its supply chain, for example. And those three things are helping us to drive a consolidation across all these different frameworks. And I'll leave it there for now, but I would say that we will see consolidation, particularly as this becomes regulated. Right now, most of these disclosures are voluntary. With that comes a lot of wiggle room. But as we're starting to see more and more move towards regulation, I think we'll see tightening of these languages and the consolidation, harmonization even more.
Yeah, that makes a lot of sense. And just to pick up a comment that you said about more forward-looking information, we strongly agree with that. We think a company really needs to tie its long-term strategy into its sustainability and ESG story, so that investors understand not just where a company is now, not just where its sort of ESG is now, but where it's going to be in 3 to 5 years from now, whether or not it has a plan for handling disruption, and whether or not its underlying strategy relies on things that are going to become extinct, expensive, or hard to use. And that's really a story that companies need to think about telling to the markets, as increasingly investors indicating that their primary time horizon is a long-term one. Megan, just to get some thoughts from you about these reporting frameworks and how companies can deliver useful information for your institution.
Sure. From an asset manager's perspective, we certainly support uniformity and a greater adoption of sustainability standards, such as through SASB. But then there's the reality, of what we find in the marketplace today, and how do you address this issue while uniformity is still seeking consensus and adoption is in process. So to address these realities, last year, 2018, our responsible investing team, in collaboration with our investment teams, developed a proprietary ESG materiality map that allows us to capture these industry differences and facilitate the integration of ESG factors into the valuation process. The materiality maps we leveraged greatly have sort of stemmed from MSCI and SASB, but then we've taken them to inform our own, again, proprietary framework. These also serve as good sources for companies seeking to better understand the financial impact of ESG factors to their business, the material factors, as we've been talking about. SASB in particular has some excellent tools available, and they have some really great training available for companies, especially relevant to factors that matter most to your sector, and also how to share this non-financial data in the financial context. Just anecdotally speaking, when we reach out to our portfolio companies with specific requests, we also, when appropriate, try to offer our own internal expertise on these issues, the relevant ESG or sustainability factors, and offer frameworks that we're looking at and industry best practices and relevant research in the event that the portfolio company is also seeking further guidance around these things. Very often, especially, I would say in the last 6 to 12 months, we've seen a great appetite in these types of conversations, and it's led to, very robust relationships. Thanks, Brian.
Thanks so much, Megan. And just turning back to Carrie as the issuer here, we talk to a lot of issuers in connection with helping them develop more long-term facing disclosures, and what we often hear is they feel like they're kind of playing acronym bingo with the number of different frameworks that they're facing, and that's before you get into the sort of ratings and rankings space. And you talked a little bit earlier about how important it is to engage with your key investors to really find out what they're interested in, what are their key issues, and obviously Dan has talked about this key concept of materiality in terms of focusing disclosures. So just kind of interested to get some additional color from you about how you make sense as an issuer of those different reporting frameworks, and how you kind of make it work for you as you try to tell your equity story that embeds the sustainability disclosures that we've discussed.
Oh, that's great. Thank you, Brian. Good question. I was laughing because I'm looking over at my office, and I have clipped up ESG acronyms and a glossary of ESG data. So it is definitely an acronym-rich field. And right now, Newmont reports a standalone sustainability report. We are a member of the ICMM, which is a pre-competitive industry group. And as members of that, we commit to reporting to the GRI reporting guidelines at a core level for the standards. And so with that said, my job is to look at harmonization across all of these different reporting frameworks. I am a strong advocate of SASB. We have not formally adopted SASB, but I do sit on the SASB sector advisory group and looking for those pieces. So when we do our materiality assessment for the sustainability report, we do follow an approach, but we align it with our enterprise risk management and make sure that those issues are aligned. The key distinction in the sustainability reporting world is that with the GRI framework and the process for determining report content, materiality also includes the voice of the stakeholders. So that could be a community member, someone who is a non-investor, the NGOs and the communities who are very important to us in terms of social acceptance and alignment. However, I had a big aha moment a few years ago when really looking at SASB and the financial and non-financial issues, they're starting to collapse into each other. So something that is in a sustainability materiality assessment has that financial risk. It has a financial value, financial risk, and it has a it's tied to long-term value creation. So those, I'm finding those are starting to collapse into each other, and I do feel that SASB is highly, highly relevant, highly important, and it is the framework of choice for investors and the financial world. So what we're doing this year is we're going to be mapping all of our KPIs to the SASB material topics. We incorporated people from SASB into our materiality assessment process, as well as our key investors and also our communities and different NGOs. We want to make sure that we're covering the financial aspects of our ESG performance, but we don't want to lose the voice of the NGO or our local communities. So we're trying to kind of walk that balance with the sustainability report right now. We're also looking at, I spend a lot of time on harmonization work, looking at CDP climate, CDP water, of course on the SASB sector advisory group, and other frameworks that are coming, and making sure that there is some kind of harmonization. In an ideal world, the taxonomy that is being proposed in Europe, I would love to have a global taxonomy for ESG data to make it easier, an XBRL taxonomy, make it easier for issuers and investors and analysts alike. But the space is, I do agree that there's starting to be a consolidation in the space in the ratings and rankings areas. And I do see a consolidation in reporting framework, and SASB is incredibly prominent and top of mind for me right now.
That's great. And yeah, when we talk to companies about setting out their long-term strategies, you know, we do sort of direct them to the sort of SASB framework to produce a sort of consolidated set of disclosures. But then obviously, you know, with that then needs to be wrapped up in narrative and maybe some other disclosures from other reporting frameworks in order to tell the full story. So it's a complicated picture, but I think also, you know, companies can do a lot by, as you have just done, kind of displaying what the process was to get to the disclosure, and the solidity and sort of intentionality of that process is, I think, very important, because it can display the extent of buy-in within the company, and it can also indicate the extent to which it's part of the governance arrangements of a company. So I wanted to turn back to the investors there to talk a little bit about engagement. We've all talked to some extent about how important it is for companies and investors to talk to each other. It'd be interesting to get from Nuveen, ING, and APG a sense of who the key functions are within corporations that you're looking to engage with on these key material ESG themes, and perhaps some of the outputs of that process. So perhaps we could start with Megan for that question.
Sure. You know, in our experience, the investor relations function has not historically been the one with whom we engage, as they tend to have been more focused on portfolio manager engagement, earnings results, and presentations, as well as PR, certainly. That said, this is truly changing, as you've picked up, particularly from Carrie in some of her comments. We are increasingly seeing more investor relations professionals step into these conversations. And I'd say it's really becoming an expectation of investor relations professionals, not really a quote-unquote nice-to-have aspect of their role. But ultimately, the issue determines who we are going to engage with. So focusing in on issues such as governance. Governance is a big one within ESG. When it comes to the G, governance, we're usually going to talk to the corporate secretary, the chief legal officer, or the general counsel of a company. And that's because we're asking a lot of questions about their board of directors and oversight functions. And again, it will vary on topic. For example, if say on pay is a concern or an area of discussion, we might also want the head of human resources on the call or in the meeting. And nowadays, it's really common that a sustainability person is at these meetings if the company has one. That's something oftentimes, at least mid-sized companies are starting to hire out and have a dedicated function. Oftentimes we get the question, are you meeting with the C-suite, and don't you have to have, sort of their ear as well, particularly to take, a substantial position within their company. And it's interesting because oftentimes it's inappropriate to have the full C-suite in a meeting because you're talking about their pay and their performance. So again, what are the issues we're talking about, and who are the most appropriate people to have in that engagement conversation? Often, as shareholders, we elect the board, we participate in that process. And so as we're doing that, if something transpires, let's say, in the C-suite, by developing those relationships outside of that group, we can often go right to the board of directors because, again, we've been able to engage with them. Just sort of thinking through a couple other things. I guess the last one I'll mention is oftentimes, you want to meet with CFOs. So that could be, viewed as a C-suite role, but in smaller companies, it's really a very critical dialogue and relationship to develop, particularly as they are really affecting, most facets of the business, with smaller teams if they have a team in place. So yeah, and again, I would just say, what we are beginning to experience with our portfolio companies is that things are definitely starting to converge. So it's likely that investor relations role will include subject matter experts on material ESG risks. If it's not already, starting to happen, we would anticipate to see that in the future.
Right, that makes a lot of sense. That there's a division of labor within a company as to who's meeting investors on which issues. I think the thing that's certainly changing is that sense that IROs are now actually being pulled into the ESG conversation, and it's great to see this year the National Investor Relations Institute indicating that that's a clear, reasonable responsibility for them to own. And then I think that then has interesting implications for then whether or not the complexion of the earnings call then starts to change, and whether or not you see more E&S and G type themes starting to appear in that context, obviously having regard for the time horizon there. Anna, it'd be great to get your perspective on engagement from APG.
Yes, thank you, and I can echo most of those things that have been said in terms of who to speak and roles of, within the company. But also I want to add to that, I think what also has changed in terms of the investor side, where previously, in general, most ESG questions have mainly been led by the ESG specialists in the investors, in the asset managers and asset owners. At least in our firm, but I can see that in other firms as well, more and more ESG topics are being raised by the portfolio managers and the credit analysts. And I think that has an impact on the conversations that is taking place, and in terms of the capacity that companies bring to meetings and earnings calls with investors. And I see that as a positive. Because the other thing that I wanted to mention, and it's been said before by others, really what we would like to see is that ESG, sustainability, corporate governance are being tackled and being part of the company strategy, and it's not something that is said alone in a sustainability report or talked about in another setting. So my call to companies would be to build upon that momentum and really make sure that companies proactively communicate their sustainability strategy as part of the company strategy, and bring that message in your earnings calls, in your ongoing conversations and communication that you have with your investor and broader your finance base. Because that is what we would like to see. Maybe just one more thing to add, and building upon what's been said before in terms of challenges, what kind of information to bring. I can certainly see that on the one hand, investors like us, we want to see what's the strategy, what is your governance, what are your policies and programs, and how do we make sure that these companies are prepared to mitigate ESG risk or even better, benefit from ESG opportunities. At the same time, also for us, we would like to see performance and performance on the ground. What has been the impact of your policies in practice, in your operations, in the communities that you operate, in your consumer base? And I can see that could be a challenge and requires navigating through those different demands on reporting. But also for us, that is why in our engagements, yes, on the one hand, we speak with board members and investor relations. At the same time, we really value the opportunity to engage and communicate with the experts in the companies themselves to hear exactly as been said about Newmont, what is happening in the countries. And I think those types of information are really valuable for us to learn what has been the impact of your policies in your performance on the ground. So just wanted to echo that.
Yeah, I think that's hugely important, and it reflects, for instance, a development that's, say, been going on in relation to proxy statement disclosures, where companies can set out how they think about their framework for engaging with their shareholders. Then they can say what their engagement across that reporting year looked like with their shareholders, and then they can seek to identify how they've then responded to those engagements. So you can tell the full story from policy, practice, and then output. And if you have companies doing that in relation to proxy style engagements, I think you can expect companies to be doing that across a broader suite of issues in relation to issues that are material to their business over the long term, particularly. So in the final few minutes, I wanted to address our final point on some of these industry collaborations. Obviously, we've heard a little bit about the importance of internal collaboration within issuers, to understand what's important on ESG and how to disclose it. We've talked about the engagements between investors and issuers, again, sharing what's important and allowing issuers to respond to those demands. And then you've also got this other area of sort of pre-competitive industry, often industry specific reporting frameworks, and then collaborations between investors also. And just wanted to get a sense of what those look like for your respective institutions. So Carrie, I know you mentioned one of the sort of pre-competitive organizations in your space. It'd be interesting to get a sense of what that looks like.
Sure, I'm happy to, Brian. So our in the mining and metals sector, we have the International Council on Mining and Metals, or ICMM, and that is, we're a founding member of that, and that's an organization that really helps to drive and align leading practices in our sector. And as part of our membership, we have sustainable development principles. We are committed to, disclosing an annual sustainability report that is externally assured according to different standards. And ICMM is a very kind of a powerful pre-competitive industry association that has partnered with the tailings failure in earlier this year, the Church of England Pension Fund, ICMM, and NGOs have collaborated together to develop some global standards around classifying and reporting and managing tailings facilities. That's just one example. The World Gold Council is another sort of a pre-competitive, or it's an industry association for us that looks at conflict-free gold, reporting and assuring that our gold is conflict-free. We also have, responsible sourcing initiatives and a number of things like that. And through ICMM, they partner with CDP, Robeco Sam, and others to do harmonization work whenever there's a sector supplement that comes out. So with GRI and CDP, we do have special mining and metal sector supplements for our ESG ratings and rankings responses. So through them, they're able to get a broad representation of the leading players in our sector.
That's great. And, disclosure practice tends to operate, on a sector specific basis. And so industry organizations sort of stepping in to help clarify that is really important. One of the things that we've seen is, for instance, the Edison Electric Institute's ESG framework, giving regulated utilities essentially a standardized framework through which they can disclose key ESG issues for their industry looks like a really good place to start, which could be reflected by other industry associations. So look, as we get towards the end of our time, I wanted to ask each of the panelists for perhaps a top tip related to our conversation today, something for our attendees to take back to their desks with them. So why don't we start there with Megan and go through to Dan, Anna, and then Carrie.
Sure. I would say, ESG, regardless of what your function is within your company, it is a must-have. It's really critical to delve into what it means specifically for your business. So if you're a corporation, what are the material factors that you need to dig into, and understand what are the frameworks out in the industry that other firms might be using to measure, report out on as it relates to those factors. And then, talk to your investors, get to know what it is they're looking for. How can you help them better understand ESG as it relates to not only the sector in which you work, but the company that you represent?
This is Dan here. I would say, we've talked about the complexity of this, but sometimes it's about keeping it simple. When we think about the tools that we work with the clients in sustainability improvement loans, we look for 3 to 5 KPIs, the environmental, social, governance related KPIs that we want to improve in order to give a lower interest rate. And that it doesn't have to be difficult. It's just about finding what is material and what is important to a company. And secondly, I'd say make it ambitious. We're not looking for business as usual. We're looking for a paradigm shift in the economy. We're looking for a transition across the entire financial sector. So we're looking for simplicity and ambition.
Hi, it's Anna here, APG. My top tip to companies: communicate proactively to your investor base about how sustainability is part of your company strategy. Don't wait until controversy comes to you. Be proactive. My top tip to investors is don't duplicate, collaborate. For instance, there's a lot of talk about investments that contribute to the Sustainable Development Goals. If you look at our website at APG, we have thought about this before. We have defined a taxonomy and have developed a collaboration with other investors and asset owners to define the taxonomy of what those sustainable development investments are, it could look like. And we want to work together with others to strengthen that framework, but moreover to collect that data from companies. So please benefit from that, and happy to work with you if you're interested and learn more about that.
Carrie, final thought from you?
All right, thanks. I'll make it quick. I'll just say collaborate and communicate. For issuers internally, really align and look at, you are already managing your ESG risks. You may not be articulating it or measuring it in a way that is relevant to investors. So collaborate and communicate across not just IR, but as others have said, treasury, finance, and your your corporate secretary and governance, and really make sure that you're aligned, communicate, collaborate, and get your equity story out there, and do it in a balanced and credible manner, and talk to your investors early and often.
I couldn't agree more. My two would be to put the ecosystem of your corporation in the room regularly, across functions, sustainability, investor relations, corporate secretary, strategy, risk, and ensure that conversation is being had on an ongoing basis. And then in terms of your equity story around ESG, tell your story, or others will do it for you, to make sure that you're really identifying the things that will drive value over the medium to long term for your business, and that those are being intentionally managed and reported on in a way that's relevant to your investors. Ed, back to you.
Thanks very much, everyone. Just quickly, Carrie, you mentioned a white paper earlier. A couple of people asked what the name of that white paper was again. I don't know if you recall that moment at all.
Yeah, I was going to look it up. I didn't want to Google while I was speaking, but it's Sustainability put out the white paper, and I'll look for it and I'll send it to you. Maybe we can send it in a report back out.
Awesome. Great stuff. Thank you for that. Well, thanks everyone for listening in. We've run out of time. Thanks especially to all of our panelists. Just a note, you will receive the recordings within the next week. I'll be sending them out to you as soon as possible. So yeah, that'll be out for you sometime next week. We are covering, and all these companies who have been speaking today are at the Responsible Business Summit New York, which is taking place in March on the 17th and 18th of next year. So yeah, please visit the website if you'd like to learn more, and if you'd like to join us in March, do let us know. The event website is events.ethicalcorp.com/RBS -NY, and you can email me at ed.long@ethicalcorp.com. Once again, thank you all for listening. Thanks to all the participants. And yeah, go on, sorry.
I've got it. This is Carrie. It's Closing the Sustainability Investor Relations Gap, Engaging Stakeholders Research, and it's published by Sustainability, who was recently acquired by the ERM Group. So you can just Google Closing the Sustainability Investor Relations Gap, and it's a great white paper.
Awesome. Thank you for that. Yeah, so yeah, and lastly, yeah, thank you everyone for listening, and I'll see you next time. Thanks very much.
Thank you.
Thank you, everyone.
Thank you.